Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Chauskas. Today is the 23rd of October 2018, so welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a look at a few instruments I believe are quite developing interestingly right now. So before we start looking at those charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so now then, let's quickly jump into the charts. Now, the first one I want to touch on is the S&P 500. Certainly the market is not open yet, but nevertheless, judging by the European indices today, of course they're all in the red right now, and of course the cash index on the S&Ps, and now to be honest on all the US equity markets, it's currently down, and we're going to end up opening here with a huge gap. So for now, brace yourselves for of course opening in the red with a huge decline. And looking at the S&P, this is where we're going to keep an eye on for today. So the 2711, this is the area that we're going to keep an eye on for today, because as you can see, it was the low that we saw here around the 11th of October, and if we're going to get a nice break below that, now this is where it could become more interesting for the bears, and especially if we're gonna get another nice break below the 2692 zone. So of course in between there we could test the psychological 2700, but these are the two levels for today to keep an eye on, because a nice good break below the 2711 could potentially, like I said, open the path towards the 2692, and if that doesn't hold, well, we could then slide towards the next potential area of support here at around 2655, and that was the low that we saw here around the 8th of May. So at the moment, as you probably understand, that the markets are not the strongest ones, and I'm talking about the equity markets, of course. So the equity markets are not the strongest ones, and we could see further declines here, like I said, if this level here, the 2711, gets broken today. So I'll just quickly mark that for our future reference. So this is something that we're going to keep an eye on, and again, like I said, if we get a break, then we're going to closely keep an eye on the 2692, but if that doesn't hold, well, I mean, this could be further sailing for S&P to the downside. So for now, guys, keep your eyes on this one. If this suddenly gets back above the 2771 zone, approximately there, certainly we're going to keep an eye on these higher levels. But to be honest, to be more on the safe side, probably would, for us to consider a possible move towards higher levels, we would need to get a nice good break here above this 20. Let me just quickly remove this 2820 zone, approximately there. Now only then we'll probably start aiming for higher levels, but for now, be very cautious, be very careful, and like I said, keep your eyes on this price action. And at the moment, I believe that we, like I said, well, not believe, but looking at the cash indices right now, we could, like I said, we could open it with a nice gap here on the S&P 500. Now let's jump into the DAX quickly. DAX keeps declining here as well, and certainly for now, everything looks, to be honest, more to the bearish side. And of course, if this is going to continue dragging lower here, the next potential area of support that we're going to keep an eye on is the 11,150. And let me just kind of remind you that this area here, the 11,150, was acting as a nice area of support here around the 12th of December 2016. So this is the levels basically that we could be testing potentially today. So of course, for now, keep your eyes on to this activity, and especially, like I said, keep your eyes on the US opening bell. Let's see how the US market's kind of going to react straight after the bell, and of course this, like I said, this could follow through the US markets as well. And well, let's keep an eye on it, because like I said, at the moment everything's looking quite bearish here. We could potentially see further declines, but nevertheless, be very cautious. It's going to be a tricky one to trade. I would probably say it this way, as I believe that there could be some increased volatility here today and maybe going in throughout this week. So on the upside, well, I mean, if this gets back above the 11,400 zone, certainly this could lead to a potential close of this gap that we had here between the between actually today's gap, that just to be more precise. If we're gonna get a nice break above the 11,400, now of course, like I said, we could test the 11,500 as well, but still we'll remain very cautious on here, and just going to continue observing this activity, because like I said, it is a very tricky one at the moment. Everything's, like I said, everything looks bearish here, and we could see maybe this area as a good opportunity for the bears to step in again and kind of take advantage of the higher price and drive this one back down again. So that's why I'm saying, for now, be very careful. If you're looking for a possible good resistance area for a possible break from which you can kind of take maybe a bit of a longer term trade here, you could in a way keep your eyes on the 11,680 level, approximately there, because a nice good break above that could potentially lead towards a test of the 11,865. But to be honest, this area here, the 11,865, is quite an important area of resistance here. As you can see, it acted as a very good area of resistance here on the 17th of October, but also played out as a nice area of support for the index on the 11th of September. So in a way, this becomes quite an important one to watch. And if you're more a conservative trader, then you could in a way wait until we could see a nice move here towards the upside, and maybe potentially closing above this 11,865, and then kind of considering a possible move higher. So for now, be very careful. Like I said, everything's not really looking good here for the indices, for the equity markets. So we could see some further declines, especially if when the US markets open. So let's jump into gold, and as you can see, it's kind of finally taking the role of the safe haven. And of course, you can see that we're breaking this important 1235 zone that I was talking about. So in a way, for now, be very careful, and of course keep your eyes on this next potential area of resistance at around 1245, marked by the highs that we saw around the 17th of July. So I was talking about this level here in the past, so I was telling you guys to keep an eye on, if we, let's say, suddenly break the 1235 zone, this is the level to watch next, the 1245, and just slightly above that we do have the 200 EMA here shown as the black line, and this is the area where the commodity could stall maybe for a little bit until, let's say, the bulls could refuel and push this one a little bit higher towards the 1266 zone, marked here by the highs of the 9th of July. So in a way, at the moment, everything seems to be looking quite bullish for gold, and so in a way, let's see if it actually manages to continue climbing higher. And let's see if it actually kind of holds its status as a safe haven here. So for now, be very cautious and keep your eyes on this price, on the price action here on gold. On the downside, well, I mean, even let's say if this reverses back down and drops below the 1215 zone that as you see I've got highlighted here as well, still not all is lost for the bulls, because we could see maybe a drop like this, a test of this downside resistance line from above, and then which could potentially act as a nice bouncing ground for gold to kind of push back up again. So for now, all eyes on the 1235. Let's see how this evolves or continues to evolve here, and the next potential target here for us is the 1245. Jumping into a few pairs now. Now looking at the Euro GBP, certainly it's these two pairs, or should I say these two currencies, are a bit of a mess today. I would probably say this way. So in a way, but we can still see that the pound is kind of performing slightly better than the euro, and of course we're seeing this kind of bearish candle now forming on the daily chart here. So but let me just kind of quickly jump into a 4-hour one, and still overall, as you can see, we're still below this downside resistance line drawn from the peak of the 28th of August. At the same time, we're above the short-term upside support line taken from the low of the 10th of October. Now in a way, certainly for now, this could continue playing out to the upside until kind of it could hit the downside resistance line, and this is where we would probably have to reevaluate everything again and see how this is performing, because if it decides to push above the downside resistance line, now this could look a bit more promising for the pair, and we could see this one maybe traveling all the way here towards the 0.8915. But for now, of course, keep your eyes on these two levels here. The first one on the downside, of course, the 0.8790. A nice good break below that could open the path towards lower levels, and also at the same time it would place the pair below this short-term upside support line, and we could then, like I said, start looking at these lower levels like the 0.8750 or even 0.8720. So for now, this is going to be the level to watch on the downside, the 0.8790. Let's see how that plays out. Of course, if we ever have a touch of that one, but if it doesn't touch that and it kind of rebounds straight away from this short-term upside support line, then, well, keep your eyes on this 0.8857 mark approximately there. That was marked here by the highs, by the yesterday's highs, to be more precise. So this in a way could open the path. If we do get a nice break above that, this could open the path towards the higher levels that I was just talking about. Let's jump into USD JPY now quickly. And of course, as you can see, the equity markets, because the equity markets are selling off, we're seeing a lot of people jumping into the yen right now. So a lot of pairs against a lot of currencies against the yen right now are declining, and USD and JPY, of course, US dollar is not an exception, but you can see that this is where it stopped today. So for now, of course, the level here, the 112 exactly here, approximately there. So keep your eyes on that one, because if we get a nice break here below, this could also place the pair below this longer term upside support line that has been running here for quite a while, to be honest, and that's to be more precise, since around the 23rd of March 2018, so this year basically. So keep your eyes on this important upside support line, because if we get a nice break below that, this could lead towards the next towards the test of the 111.65. This was marked by the lows that we saw around the 15th of October. So again, this is because the equity markets are declining right now. So this is where you have to be cautious, or should I say the bulls, the USD JPY bulls should be cautious, because this could continue falling here. And like I said, if we get a nice break here below this upside support line, this is where it could become quite ugly for this pair, and we could see further declines. And if, again, like I said, we're gonna get a nice break here below the 111.65, this could lead towards much lower levels. But on the upside here, let's say if this suddenly reverses from this upside support line and moves higher and then gets above the 112.50, now this is where it could become a bit more interesting for the bulls, and we could see them potentially maybe trying to lift the pair a little bit higher, maybe towards the 112.80, and like I said, this is where it could become even more interesting if, let's say, the pair closes above the 112.80, because this could open the path towards these higher levels like the 113.25 or above that. But for now, of course, judging by this picture, everything seems to be quite quite bearish, but let's not write off this this pair yet, because it still is above this this upside support line here that I was just talking about. And the last pair I wanted to quickly touch on, and that's USD NZD USD. So for this one, I'll just jump into a daily chart quickly, and as you can see, we're still below this downside resistance line taken from the 25th of June, and of course, until that kind of remains intact, we're going to aim for lower levels. But if suddenly this gets above it and gets above the 0.6630 zone, keep your eyes on that one. This is where it could become quite interesting for the bulls, because we could then see them lifting this pair a little bit higher towards this this level here around the 0.67 or even the 0.6720. So for those who are more on the conservative side, you could in a way wait until this could break above the 0.6720 and then aim for higher levels. But for now, at the moment, until we're kind of below this downside resistance line, we're still going to aim for lower levels, so be very careful with this one. Okay guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me tomorrow morning at my Traders Espresso, and that's 6 o'clock GMT time, 7 o'clock British Summer Time. But for now, thank you very much, and bye-bye.